this idea of the convergence of a debt-based system and a sound money digital bearer asset like Bitcoin. And when you start talking about like the business banking that you specialize in, or equally when you look at like the real estate market and how like easily accessible leverage is, and how actually, in my view, the prices that are achieved wouldn't be possible without the leverage that's going on. And there's obvious opportunities as investors and entrepreneurs to play that fiat game, right? It's to take debt at a cheaper cost than what you can grow something at. I'm enticed to do that in some ways, because it's like, how do you beat the Bitcoin hurdle rate? If it's going to be give or take 50% a year compounding, like how are you actually going to outpace that? I don't know the answer to this, but someone like yourself who specializes in debt products for businesses, like what happens in a Bitcoin standard environment? Can you still take on debt? And how do you think that might function in the future?
That's like a massive conversation. And I've listened to like people way smarter than myself battle that out. So I think it was Saifedean and Saylor had that discussion. And Saif was coming from a, hyper Bitcoinization world well into the future, where the idea of having debt products in Bitcoin doesn't necessarily make sense, because the Bitcoin will appreciate in purchasing power. And so that's going to really limit the amount of lending in the market, et cetera. And it's going to turn to this entire equity-based system where there's very, very little debt. The debt that there is would be high interest rates, because it's so risky to provide your Bitcoin to someone else, the counterparty risk that you take on. Why would you bother? You may as well just hold the Bitcoin yourself. And then Saylor was coming at it. I think they were basically talking past each other, because they were sort of thinking about two.
Yeah, I listened to that conversation. The Bitcoin nerds out there like ourselves, like the internet blew up.
It was amazing.
It's like, I'll listen.
Loved it. It was such a great chat, and both of them I respect. Both of them are very smart. It's funny how long you want to sort of project out, but I think nothing much changes in the medium term. I feel like.
And that's what, like 10 years or so?
I'd say, look, yeah, I think like what they're sort of signaling in the US is that they understand that hoarding as much Bitcoin is going to be great for the US, generally speaking. They've got gold reserves. They're now thinking, well, if Bitcoin's going to be the next gold, and that's going to potentially, risk demonetizing gold, then let's ensure that we've got enough Bitcoin to make sure that in that world and in that event, the US is the most powerful and rich nation on the planet. So it sort of makes sense to me that, people like Lutnick, Commerce Secretary, or Besant, the head of the Treasury, they're thinking that that's just a smart position to take to ensure that any risk to their reserves is mitigated by buying the next potential successor. So I don't know how much they believe that Bitcoin is going to be the successor for gold and going to be, the major reserve asset for all nations on the planet, but it doesn't sort of take too much dollars or too much value to buy a material portion of it for a country like the US, that it is just in case this thesis plays out and what sort of most Bitcoiners think will play out. It's a pretty good, risk adjusted return if they make a sizable, buy. And then if the worst case for the Bitcoiners plays out and Bitcoin goes away, then there's not really anything lost for a nation like America, because what they're talking about buying initially is probably a very, very, very small portion of their gold reserves or portion of their, debt, etc. I think where I see the most change in the world going forward is that when Russia invaded Ukraine, it was a real signal when America took Russia off the SWIFT system and effectively cancelled their $800 billion worth of reserves that were both US treasuries and also European treasuries and other, treasuries as well. So that was a sign to the rest of the world that you need to think about your reserve asset, because if it's US dollar treasuries, then you have a major counterparty risk in the US. And if you do something against the US, well, then you might lose the wealth of your nation overnight, which Russia saw. So that's why they've obviously been buying gold. Listen to Lynn Alden, Luke Groman, etc., all the same sort of Bitcoin podcasters that get around the circuit. I see that playing out where central banks need to actually address this. And then even if they don't want to, they probably are forced to now that the US is addressing it. And that then obviously leads to probably less treasury buying at nation state level and more gold and Bitcoin buying. And I'd say the pace of growth in Bitcoin will be faster than the pace of growth in gold, just because Bitcoin is such a small, percentage of the overall gold market. I think it's 1/10 at the moment. So you'd expect they'd probably buy more Bitcoin versus gold going forward. Where that leads over a longer period of time, I'm thinking 20 to 30, 40, 50 years. I think many nations' currencies will probably hyperinflate, and they'll be forced to either adopt US dollars and or Bitcoin. Maybe it'll be the euro, the US dollar, and Bitcoin as the sort of three options a long time in the future. And by that stage, you'd have to think that most people are realizing that something with a fixed supply is going to hold its value better over time than something with an unlimited supply like the euro or the dollar. Yeah, it sort of scares me what they're talking about in CBDC land with, the European Union. They're rolling out a central bank digital currency. I just don't think the take-up will be there. I think, countries that have tried it hasn't really worked out for them. I think people are sort of wising up to it. I don't think surveillance will win. I think freedom of choice will probably win, and that's sort of how I see it playing out. But I think as far as debt goes, I think there'll always be markets for debt. Generally speaking, those markets will be in the currency of choice in the US dollar. And that's not going away anytime soon, that's for sure. It'd be fascinating and amazing if it did, but I see that being a 50-year thing, that there's still the US dollar that's dominating, and most people around the world today want US dollar stablecoins. They don't want Bitcoin, and that's just the reality, unfortunately. They'll hopefully learn, and more are learning. But yeah, I think they'll still want dollars for trading and transacting, Bitcoin for saving for some time.
So you're not going to be immediately out of a day job, essentially.
That would be amazing, to be honest. If banks were no longer needed and we turned into a Bitcoin standard, then I'd probably be just fine anyway. But I can't see it happening. I think.
I think
even on a gold standard, there was still lending, right? So
completely. I think it's central banks. The role of a central bank is severely questioned as a result of having an independent money supply that you can plug into, like Bitcoin. Commercial banks, where you sit, are still going to be very much needed. Like financial services are very, very important. Mike, I'm aware of the time. Do you have a couple more minutes?
Yeah, fine. Absolutely. Cool. We started late.
And so let's just dive down that a little for a second. So that phrase you used, there'll always be markets for debt. And so the point here is just the interest rates can shift. And the term can change. I guess the question is like, if you are sitting on an asset like Bitcoin and that becomes your natural hurdle rate, and let's say it's 50% per year. Okay, well, if you want to borrow my Bitcoin, you're going to have to somehow offset the purchasing power increase that I'm going to potentially miss if I don't get those things back. So presumably the interest rate just blows out to something crazy. And would there even be a market for that? Like, how do you see that functioning?
I can't believe anyone's lending their Bitcoin, to be honest. I really can't wrap my head around it when you've got an asset that's averaging I think they say 60% a year return over the last 5 years, and then it goes up from there.
Or something. Yeah,
and it goes up from there if you go back further in time. I think one thing that I'm a believer in, and I'll probably get a bit of stick for this, is that the returns will actually trend down over time. So the last 3-year return is lower than the last 5 years, which is lower than the last 7, which is lower than the last 10. So I think generally speaking, it will trend down. That said, it's far higher than what people would expect by putting their dollars into the S&P 500. So if it's far higher than that, I don't know why people think it's a good idea to lend their Bitcoins out. I've heard of a lot of people who have, lent their Bitcoins to friends and the friends have lost them, or lent their Bitcoin to, say, borrow against them in obviously all the disasters that happened in the last bear market. I was speaking to a guy at the Bitcoin Alive conference on Saturday that, trusted BlockFi with, a few coins and was wiped out. And so I've never...
so bad right now, isn't it? 4 months later.
Oh, gosh, it would be so devastating. And so I still haven't done that to date. And I've just learned, again, the rabbit hole that I've been down since the health got just about perfect 5 years ago, I shifted and started down the Bitcoin rabbit hole. The more I sort of look into Bitcoin and the more research I do, I just realize that the smartest people in the space are the Bitcoin maxis that always say don't use leverage. So, my view is that when you've got an asset that's returning such high returns, why would you ever take that additional risk? Just sit back and stack sats and enjoy the returns. In the future, though, if you're talking about a Saifedean sort of world in 50, 100 years that he was sort of arguing with Michael Saylor, you get to a point where the returns are pretty minimal, because if everyone's on a Bitcoin standard and everyone's using Bitcoin to trade on every corner of the planet, then your purchasing power probably only improves or increases with the productivity gains that we're getting from technology and, working together and getting better at making everything that we make, etc. So that means the return on your purchasing power is reduced, and that would mean that then lending becomes a bit more attractive because you can out-earn taking on additional risk, but you can out-earn your purchasing power increases. But look, that's in a world that doesn't exist. So, delving into that too deeply, I'll leave to...
But this is where it gets so wild, doesn't it? The idea that, again, this is just like a classic arbitrage where it's like, okay, my access to dollars is better than your access to dollars, and I can get them for longer, for cheaper, and fixed rates. And so MicroStrategy, for example,
that's right,
their cost of debt is 0.85%.
Yeah.
On billions
they've got
of
zero.
dollars.
They've got zero.
Yeah, well, some of the convertible bonds. Yeah. So I recently was quoted 9 point something% for a private market debt deal with a piece of real estate as collateral.
Yeah.
It's like, okay, so I'm being charged 10% as a retail investor to get hold of dollars. And there are companies out there that can get hold of dollars at under 1%. So the game is quite clear. It's accumulate as much Bitcoin as possible, store it correctly, and get as many dollars from other places as you can, which haven't yet figured it out. So it's kind of like a game of musical chairs. At some point, the rest of the market's going to figure out that actually these dollars aren't worth anything. And the people that are getting them are buying stuff that is actually worth something. And in a weird way, that's the game that's been played for a long time already. But you've been buying real estate, or you've been buying Apple stock, or you've been buying classic cars.
That game's been exactly what the wealthy have done
for the last 50 years.
50 years, buy as much property as you can at 10x leverage and sit and wait. And that's been a really good strategy. And so, I think we underestimate how long it's going to take for the average person to realize that there's a better strategy than that. But, that's the beauty of the free market. People will work it out. I, personally don't think about buying property because I just don't think the returns are going to be as great as what I see in buying Bitcoin. You can't lever it 10x, or you don't want to lever Bitcoin 10x, that's for sure. So there is a difference between buying property you get instead of, the $200,000 that you have in equity, you get an $800,000 loan on $1 million property. And so a small percentage increase in the property value actually is a large percentage when compared to the $200,000 of equity.
Yeah, your return on capital employed can look really attractive.
That's right. Yeah. So it's better because you've got leverage, but I just think
still liquidity issues and maintenance and yield and just all the crap that goes with being a real estate investor
that I cannot be bothered with. And I had an investment property that I ended up selling because I just could not be bothered with it, and it did not return anywhere near what Bitcoin was returning.
Or what Bitcoin will, that's for sure, yeah.